If you've been watching my channel, then you know that I trade using daily cycles, but what you may not know is I look for 3 key things to make these daily cycle setups A+ and even more high probability, which is what we're going to be talking about today. Now let's get into it. So this first thing that I look for is session power of 3. If you know about power of 3, you know that we look for the candle to open up, move away from the intended draw before actually expanding to the target. Now this works for weekly, monthly, daily, 4-hour, 1-hour candles, but it also works for sessions. It also works for the kill zones. So in an example where you're trading London, what I would look for is for London session to actually move away from the draw. So let's say in a bullish example, we have a liquidity draw up here. I'm going to look for London to open up and move away from that first. And ideally, that move away from the draw is going to be a liquidity sweep as well. Now, if you watch ICT, you'll know that he talks about this as a London Judah swing. And that's essentially what I'm talking about. I'm looking for London to move away from the target, taking out some liquidity before expanding to the upside. Now, just because you hear about London Judah swing, that doesn't mean that it doesn't work for New York, right? It works for New York just the same way. So we'll look for New York session to open up and move away from that target before expanding for the rest of the session. Okay, so New York will look something like this. And again, ideally, that move away from the draw is going to actually take out the liquidity that sponsors the move to the upside. So let's take a little look at this example over here. So this is a London protraction. I'm not going to explain it too much. I'll actually link one of my videos where I break it down a bit more. But essentially you can see that we've had a move away from a bullish target based on some higher time frame stuff I won't get into. We have a target up here and price has moved away from that, taken out this Asia session, and there's actually a 4-hour FVG down here. If you don't believe me, you can go and find it yourself if you want. This is what, the 22nd of November. So if I put on London Kill Zone, you can see that we opened up here and immediately moved away from that higher time frame draw. So that is the first part of that session power of 3, right? Price has moved away from the draw. We've taken out liquidity in that move. So from here, we would expect the rest of the power of 3 to play out with an expansion for the rest of the session. So let's have a look at an example in New York. So this example is going to be a New York continuation. Again, I'm going to link a video where I break it down a bit better. We're not going to get too much into it. But essentially, I had a higher time frame target down here. It was like a daily FVG. And essentially, we're looking for New York to impulse to the downside. But for this session power of 3 to play out, we first want to see New York reach away from that liquidity target, taking out some kind of liquidity before moving to the downside. And if I go ahead and actually put the kill zone on, you can see that New York opened down here, and before making any movement lower, we actually have moved away from the draw, which is the first part of that session power of 3. And if I was to go onto the 5-minute, you'll see that that move away from the draw actually did take out this old high, right? So that movement away from the draw has taken out liquidity. So that is session power of 3. Now the second key thing that makes these daily cycle setups A+ is an aggressive sweep of liquidity. So what does a non-aggressive sweep of liquidity look like? Well, if we was to have a liquidity level here, let's say that is Asia kill zone, right? Like the example we have on the left. Let's say we have Asia kill zone and we're looking for London to take that out. Now what we don't want to see is price in London moving like this, right? Moving extremely choppily through the liquidity, and it's not very aggressive, okay? That's not what we want to see, because when you think about a manipulation, it wants to be a fast, aggressive move, because we're actually not just targeting this one level. It's actually a pool of liquidity that the market would want to take out in a fast, aggressive move. Again, I'm going to link another video where I talk more in depth about that. But essentially, we're looking for price to make a sharp, aggressive move through that liquidity. That is a clear sign of manipulation, and I believe ICT talks about it like an elephant jumping in a pool. So if we have a look back at this example, you can already see, right, it's very, very obvious when you look at it that we have an aggressive move through the liquidity. You know, price didn't mess around, it just swept it very, very aggressively. That is a clear sign of manipulation and gives me way more confidence in the fact that we're now going to move in the other direction. So then going back to this New York example, right, if we look at this liquidity sweep as well, you'll see that protraction, that move away from the draw was very, very aggressive, right? We have these very aggressive 5-minute candles that have actually swept out this old high and some other old highs within here, which is what we want to see. You know, there have been plenty of times in the past, you know, when I was unprofitable, that I would see a kill zone, right? Let's say just like this example in New York, I would see a kill zone move to the upside, right, and take out some kind of liquidity. And just because I see that kill zone reach above this high, I would grant that as a manipulation. However, there have been plenty of times where if I was actually to break down that price action within the kill zone, that price had literally just been like super, super choppy through that liquidity, okay? And just because it's moved through liquidity doesn't make it a manipulation. Like I say, it needs to be aggressive. So this last key aspect that I look for is a little bit of secret sauce. So we already know that in a bullish example of a London protraction, we want to see price form the low within that London kill zone, right? That seems obvious. But what you may not know is that for each different daily cycle, there is a key window within that kill zone where if price was to form the low, the trade will be even more high probable, okay? So for a London protraction, that key window is going to be within the first 2 hours of the kill zone, okay? If you see that, then it's even more high probable and it makes the daily cycle A+, okay? So if we have a look at this example here, we have the other two aspects, the power of 3, the aggressive sweep, but also this low here is formed at 8. If I play the next candle out, you'll see that is the low and it's formed at 8, which is within those first 2 hours of London kill zone. So if we come over to that New York continuation example, like I said, these windows vary from each different daily cycle, but essentially we already know that in a bearish example of a New York continuation, we want to see that high formed in New York session. But the key window for this one is that middle hour, okay? So it's even more high probable if price is to form the high within that middle hour of the kill zone. And if we come over and we actually look at this example here, if I play it out till we get the high, which is here, you can see this is formed exactly at 1 p.m, which is the start of that middle hour. For you to have this information in written format, I've put together a free daily cycles flowchart, which takes you step by step to identify these daily cycles, both for London session and New York. It also contains those key time windows within the kill zones I just spoke about, as well as my entry criteria. So you can steal all of that, have it in written format. There's a link to it in the description. You can claim it completely for free. Now I know after I've spoken about these daily cycle plays, you want to see how they actually played out and the entries behind them and stuff. So let's talk about that really quick. So in this London protraction example, you can see that as price was moving down into the buy zone below this liquidity, we were in a sell program, right? Price was forming and respecting bearish arrays like this order block here and this FVG here, right? So we need to see a switch in lower time frame order flow into a buy program in order to go and confirm the entry. So you can see after tapping into the buy zone, we got an aggressive move to the upside and price closed above these last 3 down candles, which is the formation of a bullish order block. So once price starts to form bullish PD arrays, we know that price is now turning around, right? We've gone from respecting bearish ones now to forming and respecting bullish ones. So once we see this, that's where we can go ahead and get the entry. So the entry could have been off the order block, stop loss there, and a really conservative target was this old London high, right? You'll see that we fly to the target and price actually goes a hell of a lot further, okay? We go way, way further. I actually have a video explaining how you could have captured more of this move. I'm going to link it up there. So let's look at this New York continuation cycle and how it played out. So as price was moving up above this liquidity away from the target, we were forming bullish arrays like this bullish order block and this bullish FVG that got respected and this bullish order block that got respected. So the lower time frame is in a buy program and we need to see that switch in order to get the entry confirmation. So you can see here we had this aggressive move to the downside that actually formed a bearish order block, right? This last up candle got closed through, so we form a bearish order block, and we also disrespect this little bullish FVG within here, and we invert it. So price is now forming bearish arrays and disrespecting bullish ones. So that is the confirmation that the lower time frame is now on side. Just like the other example, we can now go ahead and look for an entry. So you could have entered off of the inverted fair value gap, stop loss can go at the high, and again, a very conservative target is this low. You'll see that we smack the target and price actually goes a lot further than the target. And again, I'm going to link that video either now or I would have linked it earlier, where I show how you could have actually capitalized on more of a move using some key timings that I have with the daily cycles. So those are the 3 key aspects that I look for to make daily cycle plays A+. And again, if you want this stuff in written format, go and claim that free daily cycles flowchart. And if you also want to learn all 8 of the daily cycles alongside 6 technical courses, a psychology course, and a bunch of other resources, there's going to be a link below that where you can go and check out the daily cycles program. As always, I hope you found value in this video, and I will catch you on the next one.